Okay, good afternoon, everybody. Bobby Piton here, and I am going to talk about a couple companies that released earnings. I'm going to share my screen. One of them we've probably all heard of. It's called Tyson Foods. Tyson has been doing quite well, as a lot of these food companies have done that are in the protein business. Part of it is because, I actually wrote this out last week. I think about 80% of the supply. Now, keep in mind, this was like 8 years ago, but it still applies today. It's probably even worse. Uh, about 80% of the supply of protein is controlled by maybe like four or five companies in this country. And obviously, China has gotten, um, I guess you can say wealthier at our expense as a nation. They've also taken to eating more protein in terms of pork, chicken, beef, etc. And so we're going to go over Tyson Foods, and then the other company we're going to go through is a company called Trade Desk. A lot of people don't realize with the Trade Desk. Did they change their name? No. Okay. Okay. Technically, it's the Trade Desk, but when you look on Google here, it's just Trade Desk without the the. How you doing, Lashiva? And so right now I just want to start with one thing I want to mention. Gold and silver. There's been a lot of people who have been talking about gold and silver for some time. And I know there's concerns, that the dollar is going to become worthless and the whole world is going to collapse. And I understand that. It does feel like it at times because of all the madness that we're currently living through. But gold has had a really ugly week. And so I'm going to share my screen and show you guys what's going on with gold and as well as silver. You can see that in the past 5 days, gold was at about 171, and then it just seemed to start selling off on Thursday, Friday, and I guess overnight, because it went from 165. It's at 161. So gold, believe it or not, it started the year about 182. So gold is definitely going down, and there's a lot of concern right here. You can see gold was at about 180 or so as well back in the end of 2000. Yeah, so actually 182. It hit. Let me see, 5 years. Let's see where it's been. It's been as high as 190.81, 192.61. It's all-time high. It's at 161 now, and so gold has been beaten up the past few days. Like I said, silver as well. There's a lot of people that like silver, and same thing. Silver. I keep hearing about silver, and I have people call me up trying to convince me to buy silver all the time, and I have owned it at times. I don't currently have a position in silver, but it's something that also experienced quite a beating in the past week. Started the year at almost 25. Now it's at 21, which, given the fact that this is supposed to be a safe haven, people are buying it to try to protect their money and to be safe. It's down almost 9% in the past 5 days. Now, you might be wondering, why is gold and why is silver falling, and what does it mean? And what I would say is, if you look at like the VIX, which is the volatility index, the VIX is in the past year has collapsed. This is the amount of fear and concern in the market. It peaked last year at 66. It's now 17. And prior to the virus, it was about 18 in January of 2020. Went down as low as 13, and then it kind of spiked. It went from 17 and it spiked to 40. So this is when all that fear kicked into the market. That's what you see here. So that's the VIX. But Treasury's rallying. Let me take a look. Wow, even the euro is also. If you look, this is very interesting. It's like the whole world is moving toward, gravitating toward dollars. It's like the euro is now back under 110 on this FXE. Okay, it was at 114. That's quite a sell-off. So foreign currencies are getting beat up. after having a move. So this is the Canadian dollar, not as much as the euro, but that is sold off. So then let's look at the other commodity player that might be impacted. We look at Australia. So Australia, wow, Australia is taking it on the chin. 75 down to 73. It peaked at 78 in May. Folks, this is a currency. This is a currency, not a mark. This isn't the stock market of Australia. The currency of Australia is down almost 7%. So the buying power of all these Australians is 7% less than it was. Think about that. Now keep in mind, from the standpoint of the Chinese, if once again, as everybody knows, I like to think about crazy things that might be happening that we don't really think about. Nobody wants to talk about it. It's kind of hushed in people's quarters. But if you were China and you wanted to buy up Australia, for example, let's just hypothetically say, you know what, China, they got 1.4 billion people. I think Australia might be 20-something million? Australia population, let's take a look. I think it's probably 20, 30 million, if that. Yeah, 25 million, right in the middle. Okay, I said 20, 30 million people. So 25 million people in Australia. If you can knock the heck out of the currency, knock it down 7%, if you were China, when you go in there and you start buying up all the property you get your hands on, you can buy more property, right? That's the deal. So the dollar, now granted, this is the US dollar versus the Australian dollar, but you can see how we're in the middle of a complete reordering, reshuffling of how money and assets and everything around the world are going to be handled and priced. Because I have to tell you, if I was in the Australian government, which I am not, but if I was, and I was serving the people of Australia, I'd be like, guys, gals, because there's only two biological sexes, folks. Guys and gals, we got a problem because they're trying to weaponize our markets against us. So the same weaponization that we've witnessed firsthand in the United States is also happening in other countries. It's happening in Australia. It's happening in Canada. It looks as though it's happening in Europe. That's why, same thing. Europe is down their currency. Now, keep in mind, it could be the United States. Maybe we are the nation that's going around the world buying everything up. Put it this way, our currency, the US dollar, as well as the valuation of our markets are worth almost 45 to 50 trillion with a T, folks. Just our stock market. I'm not talking about real estate or anything else. If global corporations based in the United States said, you know what, we're going to go buy as much as we can in all these countries, now is the time. If I was the CFO of a multinational corporation and we had a lot of cash on the books, like Google, Facebook, I don't know, Apple, I'd be like, no, I'm not buying any more stock right now. I'm going to go buy real assets around the world. I'm going to go buy everything I can get my hands on. And part of that might be buying Australian land. Part of it might be buying Canadian land. Part of it might be buying, I don't know, land in Europe right now. Maybe the south of France. I'm not sure. But this is what it means. And the fact that gold is falling means that inflation concerns are definitely subsiding, or it could be being manipulated. We just don't know. It's one of those things that we don't know what some of these larger players are doing. So this is a good segue, as inflation is supposedly, the market is signaling that inflation will be coming down, that in fact we might have deflation. There's only two major ways to have deflation: a massive debt restructuring or debt haircut, which could happen. And if there was truly a restructuring that might be taking place of the debt, then, that would make sense as to why gold is falling. Because everybody who is banking on a default on the debt, would have a problem. So look, there's no question that it could be manipulated. Folks, I don't know. I don't think anybody knows. Anybody who tries to tell you they know. Yeah, I have read the book, 100-Year Marathon. Yes, and it's a great book, and I highly recommend that everybody reads it as well. With regards to China, look, I've been complaining about China for anybody who knows me since the 90s. I thought it was a problem the way we were doing things. We shouldn't be striking a deal with the devil, and the Communist Party is very evil, and we're doing a lot of really bad things. They're doing a lot of really bad things, and we're funding those horrible activities that they're doing. So I'm going to share my screen, and we're going to go to Tyson. Okay, Tyson Foods. Here we go. Let me get this going here. So we got Tyson Foods. You can't mess with Tyson, Jimmy Dean, Ballpark. Are some of their brands, and you can see that their revenue is up almost 25% in a year. That is unbelievable. Keep in mind, folks, a lot of food companies, they don't really have a lot of top-line growth. And so this is a monstrous move for a food company. And so inflation, as Sammy Sosa would say, has been very good to me. It's been very good to Tyson. Food inflation has been very good to Tyson, especially when they're able to pass along the cost structure to 753 million in net income, up from 526. So even though their top line went up by 25%, you can see that their earnings went up by almost 50%, folks. Wow. And that's the net income they reported. Now, if you turn around and look at after they they look at their adjusted earnings, they almost went up by 100%. Look at that, 140 to 270. So a dime away from being up 100%. That is unbelievable, folks. That's how much Tyson has gone up in the past 12 months. And so they've reduced $1 billion of debt. They can show right here. And so they've been able to generate almost $2.7 billion of cash flow from operations. They're saying 42% increase, almost 50%, but look at that, 93% up from a year ago. And they have liquidity of $3.4 billion. They're going to sell their pet treats business for $1.2 billion. Wow, and they're requiring all their employees to get vaccinated. That's horrible news. Anyways, that's really bad news to see that. I think that's a horrible idea, and unbelievable. But here's the price changes that you can see firsthand. Pork prices are up almost 40%. Now keep in mind, I don't know how much Tyson sells to China, but I could tell you right now that there's a company called Smithfield Foods, which I think was doing about 10 to 12 billion in revenue. China bought them out, but you can see that pork prices are shooting up. So maybe this number helped with our trade deficit with China, because I've talked about that last week. Our trade, our exports to China has gone up, and I can't help but think how much of it has been food. So chicken's up 15, beef is up 11, but pork is up almost 40% in the past year. So you can see that even with chicken prices going up, they're losing money on their chicken business. Isn't that something? So even though prices are up, they still lost money. So maybe the cost of feeding the birds, they haven't been able to pass it along because they're kind of small, right? Pigs are pretty big compared to a chicken, and so are cows. But you can see their core business, where they make the most of their money, is in beef. It's a 22% operating margin. That is unbelievable. So that's where their money is made. And so let me see here. Beef, seasoned foods. Let's see what their outlook is saying. Beef deliver improved fiscal results. They still think that's going up. They still think they're going to do about 46 to 47 billion dollars in sales in 2021, right there. So it's quite a big company, to say the least. That liquidity 3.4 billion, tax rate is 22.5%. And so here's a breakdown of their dividends. They've declared dividends, so they raised their dividend year over year. Not a big deal. It doesn't look like it, but it's almost a 5% increase right there in their dividend rate. And let's look at their balance sheet. So they have $3 billion of working capital, $9.2 billion in current assets, $6.2 billion in liabilities. So that's, well, yeah, $3 billion. And then they have long-term debt. Wow. Long-term debt is very manageable. Considering that they do $45 billion of revenue, 46, to have $9 billion of debt is very, very manageable. So FYI, folks, this is all for educational purposes only. I don't have a view on Tyson, whether or not to buy it or to sell it. I'm just kind of sharing the information from the filing as it came out. So the cash flow year over year, even though their earnings went up, their cash flow went down. So that's an interesting thing to see with that much pricing power, that it's down year over year, right? Net income is up, deferred taxes. So net changes in liabilities. So here it is right here. So net changes in operating assets and liabilities. They had a positive 413. 13 million. Hold on a second here. $413 million of positive cash a year ago, and then it was negative this year. So, from an ongoing free cash flow perspective, this is a balance sheet change. These numbers up here matter more. These first four line items matter more than this one. This is a one-time change, and so people that bought it because of this, this is why you have to dissect the numbers. If you don't, I think you run into problems where you can feel a little misled if you just blindly follow the numbers. Like in aggregate, you need to know what's taking place beneath the surface when I say that. Obviously, they paid down over $1 billion of debt because they issued 573, but they paid down $1.6 billion. They paid out almost $477 million worth of dividends. They bought back $50 million worth of stock. So Tyson's is life is good. They're living on the hog, right? Isn't that the saying? Living on the hog. Well, Tyson is living on the hog right now. I bet you the stock is probably having a good day. Let's take a look. TSN, it's up 8%. So just like that, it's worth $28 billion. The stock started the year at 63. It's up 21% year to date. Wow, look at this. It hit 52 last March after hitting over 90 in January of 2020. So then it's not to where it was in 2020 just yet. So there it is. 139,000 employees. Okay, so now let's go to the trade desk. A second here. So the trade desk is a company that does advertising. And, I think that this company has more than doubled its revenue year over year. Now, this company has a pretty big presence in China. I do know that. I remember reading that in the 10K. And so $280 million in the second quarter. Nowhere is it more apparent than connected TV. So they do advertising, and they customize the ads based on who's watching it in real time. And they can literally do this in a split second. They can change the ads for people. And so they can run 8 million different ads, I think, within 1 second. They can optimize who you are on thousands of different factors. and then deliver an ad to you in real time. And what they do is they take a cut to do this, right? They take a little fee. So this is a different version of Google. And if you noticed, Google has been trying to get people to sign up for their YouTube service to where they get a free month. Well, what they really want is they want you to have to log in so they can sell you specific digital ads. So Trade Desk is kind of like, it's a competitor of Google, but you can see that this company is still pretty small relative to Google, but it's doing quite well, from the standpoint of its revenue and earnings. It's gone from 139 million to 280 million. Net income is not exactly doubled, but their EBITDA margin is skyrocketed. They've gone from 14.6 to 117.9. And they've retained over 95% of their customers. And they've done that for the past 7 years. They've done a new trading platform called Solomar. And they help figure out how to optimize media spend. And so this is what they're known for. They're literally they're doing an incredible job of competing with someone as big as Google. I have to tell you, it's a really good filing worth reading if you have the time. Try to read the 10K if you have time. We have not provided an outlook for GAAP revenue. At least let me see here, third quarter. They're saying that they're going to have, this is their outlook, at least 282 million in revenue, EBITDA of 100 million. So right now they're doing like about $1.1 billion in revenue is what it looks like. It looks like they just started their conference call at around the same time I started, around 11:30 Central Standard Time. So the stock it traded down to 79. Now it's up at 83. So it's $4 off the low. So it's worth 40 times revenue. It's worth $39 billion if you look here. And so almost 40 billion for a company doing 1 billion in revenue, but it's growing really fast. And so that's the deal. People are paying for the growth with this company. So let me take a look here. So basically, went through that. Share count is up 10 million. So they've increased their shares by about 5%. No, not 5%, 2%. 2% of 486 is 10. Okay, and so we have, let's see here, platform. Here's the stock-based compensation. See, this is the thing that's always tough. They're showing $45 million of stock-based compensation. So even though the company did 280 million, in 3 months they paid out 45 million in stock comp. So this is why their cash flow probably looks better than it really does, is because people, when they exercise their options, they get that cash flow. So we'll have to look. But right now this company has 2.3 billion in current assets. Okay, 1.3 billion in current liabilities. So they have about $1 billion in net cash. They've made $500 million of cumulative profits. So then if we look here on the cash flow side, stock-based compensation, look at that. $97 million of their cash was stock. So that's the deal. This cash that they're getting, if they didn't get this stock-based cash, they would have had a negative number from operations, which, given how fast they're growing, it makes sense as to why they would have that number. But things are not, they're not as good as they look if you subtract that out. They still had a bang-up quarter. There's no doubt about that. But I'm just giving you a heads up that you need to look at that stock-based compensation. So right now, it was down, it's down $1 right now. So we'll see what happens. So anyways, that's the deal. That's the Trade Desk. Once again, I have no opinion on the Trade Desk nor Tyson Foods. They are worth watching. They both have very fascinating businesses. And I think, the stock-based compensation, this has been around for over 20 years, folks. It's nothing new. Um, you know, I don't think we really have people in Congress that understand accounting, or, definitely don't understand the financial markets unless they can front run and trade ahead of everybody else, which seems to be the case with Congress. They think it's okay for them to do that, right? Um, um, they're not subject to insider trading rules like the rest of us are. Go figure, you know. But yeah, online advertising is what Trade Desk does. They do a lot of advertising through their apps, on your phones, smartphones, televisions, smart TVs. They literally digitize ads in real time, and they price inventory of companies in real time. So like I said, it's a different version of Google, and supposedly, they might have figured out a way to do a slightly better job than Google in some of their business, but that doesn't mean that Google's not trying to figure out how to make them obsolete. Google is a monopolist, and they're basically trying to knock out everybody. At some point, I'm surprised they haven't tried to buy out the Trade Desk when it was smaller. Maybe they wouldn't sell, but it's a $40 billion company. Google could absorb it in a heartbeat by just issuing stock. They could take it out very fast if that company wanted to sell out to them. So I hope you guys enjoy the rest of your afternoon, and I will see you guys later. I'll see you tomorrow with Preactive, and then I have the greatest book ever written tonight at 8:30 p.m. Have a wonderful afternoon.